So, hi. Now, yes, there's a possibility of us having price moving to 2550. However, I feel that 2550 might not be the end of the wave, as in its terminus, because I'm seeing a possibility of the market pushing to around 2580 or 2600 big figure. So I'm going to explain what I'm looking at or what I'm seeing by using a couple of things. I'm going to use Elliott wave. And then I will use big figures or round numbers or quarters theory, and then I'll also apply ICT, which is like the main trading methodology. So for starters, let us just look at this market to understand where the market has been trading from, or what the market has been doing. So okay, so I have intentionally decided to do this so that we can see how the market looks like from a big picture perspective. It's always important to know what the market is doing or where the market is headed. So okay, just a bit around here. Yes, let's get rid of that. Yes, so we are looking at this market just to see this looks like a good uptrend, pullback, uptrend. We've pulled back, this low still holding, and then see what is happening here. You see this low vis-a-vis this low. So if we used this, you can clearly see we have a low here. Yeah, this is a low, and here we have a higher low and a lower low, so we have divergence of sorts here. So we can start looking at our move from this point. I use divergence to show me the end of a possible portion of a wave. So this one looks nice. We've had that move up, we've had that move down, and then here we are going up, you see. So we have this, we have down, we have up. What am I going to do here? Yes, so you can clearly see from there, after this up move, we've had a pullback, another up move, a pullback, up, down, and now we are going up. Now, what I was trying to reach to is this. This is what I wanted us to zoom down to. So we have seen where price has been coming from, and this low is significant because looking at that low, that's a July low, and seasonally this July low is very significant. Consult with the seasonal charts, you will see that this is a very significant low. You trade from here, then we went up, and then we did a pullback back into this order block, you see. And actually here it's important that we mark this. Let's just mark this PDRAs a bit. We have this high that was taken out. After we took out this high, we did a pullback. This is what we call a return to order block. So we came back to this 2-hour order block. So I'm going to mark these 2 candles and then extend them. Then you'll see how we reacted to the midpoint. So after that, the market then pushed up, and then we continue to go up. So you will realize that I've marked this, and it was intentional because, again, as I've just mentioned, I look at divergence to tell me the possible end of one wave and the beginning of another. So the move to the upside, the one that we are currently trading on this time frame, it might have originated here. So I'm looking at this as a possible wave 1 with 5 internals, a possible wave 2, and then now we are looking at a possible wave 3 that brought us all the way to this area here. This is a possible wave 3, and then this is a possible wave 4, and then now we are trading, we are doing the wave 5 to the upside, and I'll explain that one in a bit. But first of all, let us just confirm that indeed this is a wave 3. So for wave 3, we expect this its extension to be between 123.6 and 123.6 and 161.8. So let's see. So this here, look at that. It is 1.236. That's our extension. So this is good enough. This is a 3. And sometimes we like to see a shark fin out of the upper band. This did not really go out, but at least it gave us a shark fin very, very close to the outer band. And then after that, you expect a 4 that will give us a shark fin to the outer band or to the midpoint. Sometimes it does not do a deep wave 4 the way we can see here, but this is a possible wave 4 that I'm looking at. This is a possible wave 4. So for us to know if it's a possible wave 4, again, the rules, we are going to apply the same thing. We will apply, we will use not TDI, we will use Fibonacci, the Fibonacci tool from wave 2 to wave 3 measured. We expect it to be around 0.25 and 38.2. So it came very close to 38.2. This is good enough. And we have a confirmation here for turning to the upside. Those who just trade TDI signals, this crossover is something that you will have traded. This shark fin is also something that you will have traded. And also we see in terms of ICT, what the market did, the market actually came into this fair value gap. There's a very nice fair value gap here. Let me just open it up so that you can see it. There's a very nice fair value gap here that price reacted to. Price reacted to that fair value gap, and price did not close below this breaker. And this is an old high. So old high, breaker, fair value gap, those are just too many confirmations. So price traded from there and then it pushed up. And because we did not take out this high, this is not a complete wave. So we are looking at this again as an internal. Remember, this is wave 4, so this cannot be wave 5. So wave 5 is also likely playing out in 5 waves. So we have a possible wave 1 that has already formed, a possible wave 2 that has formed in 3 waves, and then now we are looking for a possible wave 3 that will come up to around that area, a possible wave 4 that will drop to this area. Remember, not closing inside our wave 1 minor, because this will be a wave 4 minor, and then finally we'll have a wave 5 minor that will now finally give us a complete wave 1, 2. Okay, let me make it this way so that you can see. So it will give us a wave 1, wave 2, wave 3, wave 4, and wave 5. Closing the whole of this move for us, and then we will expect some measured move of retracement before we continue up, if the seasonal tells us that we are going to continue up, because I believe that it is telling us so. So we will have about 38.2 to 50% to 62% retracement, and then we will start going up again. So sometimes if the market wants to do a deep retracement, it can maybe do an A, a B, and then a C, and then take out this the low of this wave 4. Now, the low of this wave 4 will be our target if we get divergence between wave 3 major and wave 5 major. If we get divergence here relative to what TDI will have, if we get divergence here, then we will target this low as the low that we'll be trading to in terms of our correction. And then after that correction, we again start looking for our move to the upside. So that's what we'll be looking for. That's what we'll be looking for. But for now, our focus is now here, because we've already said that we are looking at this as a possible move, as a possible 5-way move. Then we will now zoom in and look at this as the beginning of the 5-way move to the upside. And now this is what we are going to do, because this is H4. We can go down to H1. Yes, this is now our H1, and now on H1. On H1, we are trying to look at this to ask ourselves, where are we starting from? Where are we likely to be going to? So we have this as our possible wave 1. If you look closely, you will see that we actually have 5 waves inside here. You can count those, and then we have these 3 waves that have dropped. Then we will have this as our possible wave 2, and then now we are looking at a possible wave 3 to the upside. So for the wave 3 that we are looking at, let's first of all confirm the retracement for this wave 2. Then I'm going to say something. See, we came very close to 62, 0.62 here. We came very close to 0.62. So we are looking at a possibility now of the market doing a push to the upside. So this is 0.62. So 0.62 is considered a deep retracement, and you can see it came in 1, 2, 3 waves. So this 0.62. After that 0.62, now when we go up with our wave 3, our wave 4 it can be shallow. It can be between 0.25 and 38.2. Okay, 0.382. So when we see this is what we call the law of alternation in the wave theory. This is what we call the law of alternation, that one wave can be deep, the other one can be shallow. The corrective waves. When the first one is deep, expect the second one to be shallow. So that's a possibility. Then now we are looking at this as our wave 3. Now for wave 3, we'll be looking at this. We'll be looking at this movement here. Sorry, let me just redo that. We'll be looking at this. So we talked about 123.6. We talked about 123.6. So this is a possibility. 1, 2. Now our 3, the market can give us this here around this area. You see, it has already gone slightly above the region that we are looking at, 2550. So this is 123.6. So that's a possibility. Or if it wants to be extended, nothing stops it again from going to 161.8. Let me remove something here. There's something that is cluttering our chart. What is it? Let me remove this one first. Then let me remove this. Yes, that's better. And also let me remove this one. Okay. So let us explain this again. So because we've had this dip, now we can be expecting this to go up to the upside and then give us a 123.6 or to 161.8. So let's measure that again and just mark it. So here you go. You can see 123.6 is around this area, around there. And then now we get rid of this. So we'll extend this one to 161.8 if need be. But for now, we hold it at 123.6. So let's now see what the retracement can be. So for the retracement, we are looking at a possibility that the market can retrace to this level here. We were talking about the possibility of the market going to 38.2. That's a possibility, or it can even come to 50%. So I'm going to use 50% for now, but again we will adjust it as we continue, as we get more information from the market. So this is just better forecast. This is just better forecast. So after that, what are we looking at? We are now looking at a wave 5 that can be 0.618. I don't expect it to be 100%, but you are going to look at where 100% and 0.618 will take us. So let's do an extension again of 2 to 3 back to 4. So you can see 61.8 is around this level. Oh, sorry. You can see 61.8 is around this level. You see, very, very close to 2.575 big figure. So I'm actually going to leave it at 2.75. That is where our 61.8 level is, and our 1 level is at 2600. So this is also important. So we are also going to mark that and just pay attention to see what the market wants to do between these two levels. So between 2575 and 2600, so the market can actually push to 2600 the way we had mentioned. I was thinking of that possibility. So we can actually look at that and see if the market wants to do that. And then we will take that as our terminus. And then of course, I've already hinted that when the market starts to drop, we will look at what the market is doing to determine how deep the retracement will be before we continue to the upside. So let me just clean a few things here so that we can now see the chart as is. So when you look at H1, this is what we are looking at. You see, this is what we are looking at. And because we've already hinted and said that the market started its move here, so this will be our, let me show you. This will be our 1, our 2, our 3, our 4, and now our 5. Now, let us see if that 5 is possible. Because the market is a fractal of itself, we always confirm after we have done our forecast. That is from wave 2 to wave 3. And then you come to your wave 4. And then you can clearly see where wave 5 is likely to terminate. We talked about 25.75. This is a nice place because that is 0.618. If it decides to go higher, 26.50 is also a possibility. So it actually depends with what gold wants to do. So we will just trade it as is, and we'll be looking for divergence between wave 3 and wave 5, or wave 3 minor and wave 5 minor. So that is what will inform us, that will give us a hint that maybe our wave 5 has ended, and now we get out and start looking for a possible deeper pullback that might bring us to 24.50. So that's what I'm looking at. I hope that has been insightful. So let's continue. Now, one more thing, maybe before we end this, one more thing that I'm currently looking at on minute 5. So on minute 5, I saw some divergence here. I saw this divergence between this high and this high. So internally, this is wave 1, wave 2, wave 3, a possible wave 4, and now this is a wave 5. Now I am looking for price to come and at least take out this low before we continue to the upside. So I'll be looking to buy from around 25.09 level. I'll be looking to buy if this market, and this buy is what will propel us all the way to 25.50. Of course, not in a straight line, but all the same, that's what we'll be looking at. And then our stop loss placement will be possible. We can have a tight stop for this, because if indeed we get a signal here to buy, we can then have our stop loss around this level, because again, we don't expect okay, this is possible because 1, 2, 3, 4, 5, the 5 waves have ended. So we will check where to put our stop loss, but maybe we can put it either at this level or at this level, either of these, and then now we continue to the upside. So that's what we'll be looking at. Yes, we will see if we can do an update later of how this has played, but that is all for now. Thank you.